Hey, welcome back to the Cardone Zone. Grant Cardone here, and so glad to be with you on this Monday, 12 p.m. Eastern Standard Time. Every Monday I come to you to talk about your money, your finance, your business, to take on topics about finance and economics that you find important to you in your life. And a lot of times we talk about real estate here. We've been talking about the banks, interest rates, inflation. We've been talking a little bit about crypto. Today, I'm going to talk about and share with you the real estate versus crypto argument that I was with a friend of mine last night. We flew to Atlanta, spoke to 1,000 people in Atlanta at a great event, by the way. There was a phenomenal event where I was able to speak with Master P. Can you show that list of people that were there? Stormy Wellington, Les Brown. Just pull that up at the goatcon.com. The goatcon.com. Absolutely phenomenal event where I was trusted with an audience of people to talk to them about money and finance and the importance of learning, how to debunk some of what we've been told that keeps us trapped. And today and on this show every Monday, I try to share with you ideas about how to do that. When I left that event, I went to Dave Chappelle's event in Atlanta. I cannot believe how many people, these are mega superstars. Usher, Lil Jon, 2 Chainz, Jeezy was there, or Yeezy was there, so Jeezy. Yeezy was there. Who else was there, man? It was just endless lineup of superstars, people that are just phenomenal. And how many of these people are familiar with my work was so humbling to me. And they're so many of these guys that I have watched on TV and heard on, iTunes for years that know about me because of the educational work that we're doing here online. So today what I want to do is I just want to talk about the real estate crypto idea, because I was with a friend of mine this weekend. She's like, look, Grant, your returns just aren't as exciting as crypto. I said, okay, what do you mean by that? Okay, so let's just take real estate. And I'm going to show you the pros and cons. By the way, there's pros and cons of every investment. The one thing that I like about real estate is I can go big on real estate versus am I really willing to put everything in this asset? And if you study wealthy people the way I have, the wealthiest people, if you go even back to the 1800s when this country was founded, or even before that, if you go back to the 1400s in Europe, the true wealth is created when somebody goes big, real big on something. So in my career, in my life, I've been looking for that thing that I could, go really hard on, something I could go real big on and not risk all my money. Let's say I had $67,000 and that's all I had. And I had $67,000 2 weeks ago. And I'll use this example. I could have bought 1 Bitcoin for $67,000, or I could have found a piece of real estate to buy for $67,000. Okay. Let's say it's my last $67,000. It was hard getting the 67 grand and it was difficult. And I'm worried about it. I don't know if I can even get another 67,000. Just think about this when you're making this decision and having this argument. And I'm going to go over a bunch of stuff that's written by Forbes and other third parties about these comparisons between these two asset classes. If you're in a situation where you have $67,000, that's your last $67,000, and you don't know if you can get another $67,000, your tendency is going to be, I want to spread it out amongst 67 things. That's not the right thing to do. If you want to create true wealth, you will go all in on that one thing and you won't want to lose your money, okay? There's some things you're going to want from it. And all I'm saying to you on this, in this scenario, for me to buy $67,000 worth of Bitcoin, I get 1 Bitcoin. If it was Ethereum last week, it would be 67,000 divided by 4,500. And that would get me 1,400, is that right? 67,000 divided by, I think it was 4,500 last week. That'd get me 14 Ethereum. Okay, so I would have been able to buy, I'm gonna show you the pros and cons here in a second. I could have bought 1 Bitcoin, 67,000. That was last week. I could have bought 14.7 Ethereums. Okay, I think that's the way to say it. Or I could have taken the $67,000 and I could have bought $280,000 worth of real estate. Thereabout, okay? I could have maybe bought more than that. I could have probably bought $350,000 worth of real estate because I could use debt. I cannot use debt on this. I can't use debt on this, at least not yet. Now, there are some advantages to the crypto, and I want to go over all that and be fair. As some of you may or may not know, I do own some Bitcoin. But it's not like it's this much of my net worth, okay? I am massive investments and positions in real estate because for me, real estate is something that is a long-term proven. Let me just give you something. I'm reading this right off of a great article, Bitcoin versus Real Estate, which is the smarter investment. And they take some pluses and minuses here. You guys know what Bitcoin is, obviously. It's not a conventional currency like cash. And personally, I'd rather have the Bitcoin than have this. But I need this right now to still buy the real estate. Okay, now, could I use Bitcoin? Yeah, I'm probably going to convert the Bitcoin or the Ethereum to cash to buy the real estate. Okay, because I still can't do or figure out how to do a real estate deal. Would love to learn how to do this, by the way. Would love to learn how to take my whole building, an entire $350,000 building, and actually fund it with crypto. And I'm open to it. I'd do it with an NFT if I could. So all that is interesting to me. I just want everybody to know here, all that's interesting to me. But there are some pros and cons to every asset class. Here's the negative. Here's a pro with cash. I have cash, okay? A pro is if I need cash, I have cash. But if you go to Neiman Marcus with this much money and try to spend it, they're going to have a problem taking it. I guarantee they're going to be like, we don't want this anymore. Go in there with $10,000 and see if Neiman takes it. There's a negative to having cash. What's another negative to having cash? I can lose it, I can burn it, it can be stolen, and it goes down in value. Every asset class has a pro and a con, okay? Some of the pros to real estate. What's a real pro to real estate? Well, number one, it's real, okay? It's just a real asset. It's tangible, I can touch it. There's an address. I can see it, I can feel it. I can go do research on it. I can actually go to, let me see, I'll show you a deal I'm doing right now, Los Olas Walk Apartments. I'm gonna put it in my Google search and bang, it's gonna pop up. I can't really Google cash, okay? Here's the property. Is that Los Olas? No, that's not the right one. That's the one across the street. Here's the property right here. Gives me an address, it gives me a map. It's real. You understand what I'm saying? It's a real asset. I can touch it, feel it. By the way, this is why this asset class, and Johnny, these lights are really bright. I don't know if I can bring somebody in just to bring these down just a notch, but they're just blinding me, man. This asset class has been the single most the word is successful in crowdfunding. There's no asset class that's been more successful crowdfunding from investors as real estate. Why? Because I can say, there it is. There's the property. Thank you, Johnny. Here's the tenants. There's the address. Okay. So number one, it's tangible, real. I can touch it. Two, it is versatile, meaning there could be, like in that property right there, there's so many versatile different ways to create income out of that building. There's rental income, there's parking income, there's valet income, there's trash valet, there's dog income, there's water, electricity income, there's smart, we add this smart package where people can pay us $25 a month for internet access. There's so many different versatile ways to create income. Also, it's a necessity. I have to live somewhere. People don't have the choice, most people don't have the choice to live outside. They want to live somewhere. Even people that are homeless are looking each day, at the end of the day, they're like, I got to find a place. And I'm willing to do something to find a place to get warm. So it's versatile. Three, tax benefits. The tax benefits from real estate, without exaggeration, there is no asset class on planet Earth. There's no argument to be had on this. There is no asset class in the world that provides more tax benefits than this right here. And this is something that everybody here should consider, particularly high income earners. If you're earning high income above $85,000 100,000, 115,000. If you're anywhere in that band where you're starting to pay 30% federal taxes, you need to look at real estate over the cryptos because it provides you with a tax benefit that the cryptos don't. Long term, this is a long-term proven, thousands of years, hundreds of years in this country. Real estate has been a great asset class. Bitcoin's been around since what, maybe what?
I think 2009.
2009, yeah, exactly, 2009, okay? And if you'd have bought it in 2009, dude, you would have made a lot of damn money. A lot of money. If you'd have bought real estate in 2009, you'd have also made a lot of money because the world was coming to an end. It was actually the housing crisis in America, the global reset worldwide, where housing mortgages were overdone. Everybody could get a loan on a house. You had people that never bought a house before buying 5 and 6 of them with no money down. They were over leveraged, and the world came to an end. At the same time, there was a thing called Bitcoin that was being created at that time, but an unknown person named, what's his name? Hiroshima Satoshi. And some people think it's a guy named Craig. I don't know. I'm trying to find out who this guy is. I'd love to meet him. I'd love to have him at our growth conference. And he creates this code, basically, this way to basically decentralize this. So this is no longer in the hands of the government, okay? So long-term, real estate is a very proven asset class. And another reason I love real estate that over other asset classes, at least for me and my family, is number one, I can't lose my money. Literally can't lose my money. How do you lose your money? How does a piece of property disappear? It's insured against hurricanes, tornadoes, should be anyway, fire, okay? If this burns, I can't insure it. You cannot insure cash. Can you, Johnny? I don't think so. I can insure my jewelry because it's real, but I can't insure my cash. And then cash flow, okay? Cash flow, the cash flow I get, this is the holy grail of all finance, man. The more cash flow you have, the more freedom you have. So this is what I live off of. I live off of passive income of all these properties that Johnny's showing you right now. Every one of these properties provides me and my family and our investors at Cardone Capital with cash flow. So the property, we pay X dollars for the property. We put money down to buy the property. We have debt, okay? We got to fix the roofs, the paint, take care of the tenants, and at the end of that, pay property taxes, and then we pay our debt, and at the end of that, there's some cash flow left over, and that's what we distribute to our investors. In fact, this year, we have already sent $32 million. $32 million this year, already 2021, to myself, my family, and our investors, okay?
The year's not over.
And the year's not over, okay? Now, what's the negatives? This is the negatives to real estate, just to be completely straight up with everybody. There are negatives to every investment. Number one, it's heavy. Heavy meaning, man, it's a complex purchase. This is like a big giant tractor, 1,000 times a tractor's, right? It's a big house. Hopefully it's bigger than a house. It's 456 homes in one location like we buy today. It's expensive. Real estate's an expensive asset class. In fact, I try to buy the most expensive real estate I possibly can buy, not the least expensive like some people. I want to buy the most expensive stuff because I want to sell that later at a more expensive price. It is not liquid. I cannot get my money out of the real estate instantly and easily. Anymore, I mean, I guess I could sell my Richard, okay? Somebody would give me money for the Richard. If I was in a hurry to sell the Richard and I needed some money, but I don't need money because I got cash flow. See, that's the thing that people don't understand. They never get enough passive cash flow. So they're like, what if I need some cash? This is what I live off of right here, cash flow. I only spend the cash flow for my real estate. That's all I spend, okay? Government's involved. The government is heavily involved in real estate. I got to pay property taxes. I got to have permits. I got regulations. I got police around my place. They see it. They see how I'm taking care of people. And I got tenants. And tenants are a pain in the ass sometimes. But I got 12,400 tenants that depend on me for housing. Also, these people are going to become investors with me in the future. 12,400 families that every day they're looking for me to take care of them. I promised I'd take care of them. I'd provide them with electricity, gas, water, security, things are going to work there, the lights are going to work, the plumbing's going to work. I got to deliver on that. Now, let's talk about Bitcoin or cryptos, okay? Ethereums, any of them. The Doge coins, the pet coins. What else is there? There's like, I don't know, thousands of coins, okay? So number one, it is liquid. It is so liquid, okay? It is so liquid, I want to look at it every day. In fact, I want to look at it right now. Last week, it was $67,000. This week, let's see what it is right now. I can't do this with real estate, by the way. I can't look and see what my real estate's worth today. There's just no barometer that tells me what it's worth. Okay, today this Bitcoin is worth $57,000. That's right here, right now, this morning. I don't know if you can move in on it, Johnny. See it pretty good like that? Okay. You can see that last week it got slammed. It went down to, in the last 1 month. Look at this thing fall off right here. It's scary, right? So it's coming down here. Now, if you bought last week at $67,000, you're like, oh my God, that hurt. I just lost $8,000 of my money, okay? Well, I didn't lose anything because I didn't sell it. But basically, you lost 12% of your money, okay? Now, 12% in 1 week. Now, you're like, I didn't sell, so I didn't lose anything. Okay, good. So let's say you bought this. My friend Stormy was like, Grant, man, I've made so much money in Bitcoin. I said, if you hadn't sold it, you hadn't made it.
Exactly.
Okay, so understand that the liquidity can actually be a negative for many of you in the room, many of you watch it. Because if it goes from, look, I bought some at 500. I got 85 pieces at 500.
Damn.
Okay, down here at 500 bucks. Now watch what it does. It does this. It goes to 67,000. Then it pulls back to 57,000 or whatever it's at today, right? Okay. Now I'm like, oh my God, I made so much money. I hadn't made any money. Dude, don't talk about me making money. I hadn't made anything. The Bitcoin went up. I didn't make anything. So quit lying to yourself. You are liquid, and liquidity can be, and most of you are told, is an advantage. Liquidity is not an advantage for me. I do not want my money. I live off of cash flow. This is what I live off of. I never live off of selling assets. In fact, if you study rich people, if they're going to go from rich to wealthy, they don't sell assets. They use assets to create more assets. All right? I mean, the smart people in the crypto space are going to borrow against their positions here and use it to buy other assets. They're not going to actually sell this, because if I sell this today at 67,000 and I have 85 pieces, 85 times 67,000 or whatever it's at today, 58,000 times 85 pieces. I'm going to 4,109,000. Okay, that's what I'm going to sell it for, all right? And the U.S. government's going to say what? Good, we want half of that, dog. So what did I really make? I didn't make $4 million. I think I'm going to be capital gains on this, so it'll be a little lower. But my friend bought it, and my friend, she's like, I made $3 million, Grant, on my Bitcoin. I said, how long have you had it? She's like, 9 months. I said, great. If you sell it today, you're going to pay the U.S. government $1.5 million. Because it does not come with any tax benefits. That means your $1 million didn't make $3 million. Your $1 million made $1.5 million. So you guys got to quit lying to yourself saying, I made all this money, because you made all this money, gross money, and you need to do your calculation net of taxes, okay? So the liquidity can be a problem. If you need money, good. But like, why do you guys all go into that? Like, oh my God, I got to have liquidity. I might need the money. Then what are you doing making this bet? If you need the money, why did you make the bet? See, I know I need money in the future. That's why I invest in things to provide me with cash flow. And the only way I handle emergencies and problems and situations and family that needs stuff is out of the cash flow, passive cash flow, okay? Okay, it's decentralized. That's super cool. I love that about Bitcoin and Ethereum and the Doges and the pets and the I mean, I don't even know how many of these coins there are. These alternatives coins. Some people call, you know, some people don't trust those and they want to stay with the primary cryptos. Supply and demand, okay? Look, when you have 21 million pieces and that's all you're ever going to have, supposedly, there's only 21 million pieces of BTC. and there's only so much etherium, and you can only mine it and create it so fast, okay? And you can't go out and just create new supplies of it. That restricts, unlike cash, they just keep printing more of this. I would say to all of you out there, and look, I'm not a well-versed crypto person. I'm just today in this show covering the advantages of crypto over real estate or real estate over the crypto. There's massive upside. I would tell you the upside in this is phenomenal. I told my wife the other day, she's like, how high do you think crypto could go? I said, it could be $150,000 for what I know by the end of the year. In 30 days, it could do that. My real estate cannot do that. My real estate is not going to go from being worth 200 grand a door to being worth 2 million a door overnight. This is not going to happen ever in my lifetime. Not overnight. Now, it could happen past my lifetime. And in fact, it has. Okay, over long periods of time, I get growth. Over a short period of times, you can get massive growth. I think if you would have bought Bitcoin, when was the big pullback? In 2000, let's see, what was it? There was a huge pullback.
I think it was in 2019.
Yeah, it went from 500 to like 19,000, and then wham, it just fell apart. I think to 7,000, 4,000.
Yes.
And so everybody that got caught in that from $19,000 to 4,000, you lost 75% of your money if you bought it 19. Somebody bought it 19. Every time somebody sold at 19,000, somebody bought at 19,000. So for every person that made money at 19,000, okay, somebody lost money when they bought at 19,000. When it went to 8,000, 5,000, 4,000, when people bought at 4,000, somebody up here at 19 had to sell it. When you have a limited supply, you have the same people losing and winning. You have the same number of winners and losers. So we always hear about the winners. We never hear about the losers. Now, had you not sold when it went from 19,000 to 4,000, had you not sold, by the way, then you just gave up your liquidity. Okay? You guys trick F yourself with saying, I got liquidity. If you're not going to sell, liquidity doesn't matter. And that's why so many people that are buying crypto, you delude yourself saying there's liquidity, when in truth is you're a hodler and you know it. I've never sold any of it. I've never sold any of my, and I've added. When it went to 30,000, I added, okay? So some of you, when it went to 4,000, you added to your position. So quit telling yourself you're liquid when the truth is you ain't selling any of your shit and you know it. Now you're trying to figure out how to use it. You're trying to figure out how to move it into something real, okay? Okay, so the negatives, volatile, it has been hacked, okay? Like millions and millions of dollars has been lost. We don't hear about this a lot anymore because people don't want to talk about it being hacked. It can be hacked, has been hacked, and will be hacked again. There is no cash flow. There are no tax benefits that I know of. Let me know if there is. And there's no leverage. What's leverage? And some of you are going to argue with me and say you can borrow against your crypto. Okay, good. But there's no leverage going into it, meaning I can't go to some place and say, hey, I want to buy $6.7 million worth of crypto, and I want to do that with $1 million. You cannot do that. And if you can, please let me know. That's called leverage. Now you're like, well, what's that got to do with real estate? Because in real estate, I can take $1 million and buy $6 million worth of real estate. Leverage is the way to create power. Leverage is the way to create true wealth, okay? Because I'm leveraging garbage cash. I take $1 million. I'll give you a better example. I take $70 million and I buy $230 million worth of real estate. And I go to my friends and I crowdfund this. And we create basically a fund, a crowd fund. We create a fund where we are all invested as a team, as partners in a $230 million piece of real estate. I can't do that with Bitcoin. I can't go raise $70 million, put in some of the money myself, raise it for my friends, and go buy $250 million worth of Bitcoin or Ethereum or some Dogecoin. You can't do it, folks. So don't tell me you can do it because you can't do that at this scale. Not yet. But I can do it with real estate. In fact, this is the asset class that you can do it. You can't do it with houses, duplexes, fourplexes. You can't get enough duplexes or houses to do this transaction. This is how you create true wealth. This is what I was telling people in Atlanta about. I'm going to build a bank like this. We're going to become a bank, okay? And I'm going to go to my friends. I'm going to go to my friends on Instagram, Facebook, my friends in Atlanta that I was with yesterday, my friends at the event with Dave Chappelle I was at last night, my Tiffany Haddish. I'm telling Tiffany, I'm like, Tiffany, I'm going to build a bank right here. And this bank is going to go outside the parameters of what's been done before. I'm not going to use the traditional banks. I'm going to use and build a new bank. And this new bank, we can take $70 million from people at $1,000 a person. 70 million divided by $1,000. And I can have 70,000 of my friends on social media, which is only a small percentage of the people that follow me on social media. I'm gonna have 70,000 of my friends on social media participate in this asset that is real. What's the benefits of it? It's real, okay? It can't go away. It has very little volatility and it provides cash flow. We distribute every quarter, every 3 months, the bank of Cardone will now send you a check and you're still invested. You still have your investment. You haven't sold your investment. And then we wait for like 10 years, at which point our goal would be to send everybody their dough back, $70 million back, to our partners and investors in the deal, and we still own the real estate. Show them the deal. 10 years from now, this piece of real estate will be worth more money than it is today. It will still be there. People will still live there. In 10 years, we will have some, I don't know, maybe 4,000 families run through that property. 4,000 different families that paid our 70,000 investors cash flow every quarter, tax benefits galore, okay? Appreciation long term. And we benefit from inflation, which is here and it's coming to a town near you. I know we got a bunch of callers, right, Johnny?
Yes, sir.
My name's Grant Cardone. We do this show every damn Monday, okay? And I do it to get you, kind of wake you up about the money game. I'm not here to be right. I'm here to help you. If you have a different opinion, please post it in comments. If you're not following the channel, please do that. I do this every Monday. We archive all these shows at Grant Cardone TV. We're going to be doing some fantastic things with Grant Cardone TV here in the future, so make sure you're signed up there. Let's talk to our callers, Johnny.
Alrighty, we got Glenn in Dallas.
Glenn, what's going on in Dallas, man? How you doing?
How you doing?
Good, buddy. How you doing?
I'm fine. Love the show, by the way.
Yeah, thank you. Thank you. Hey, what?
I have a question for you.
Yeah, go ahead.
So I'm 27. Just moved out here to Dallas, Texas. I make salary. Married, 2 kids, and I'm ready to change, create wealth. During the pandemic, taught me when I got let go from my job, if I lose my job, I have nothing.
Yeah.
And I'm ready to get into real estate, and I just want to know, how do I start? I have about $5,000 to the side. I was thinking about saving up to 10, but how do I initially start? What should I do with that? Should I go buy a house, probably a duplex?
Yeah.
And go from there, or what?
So this is a perfect example. This is a perfect example because he's got $5,000. He's got 2 kids. He's on the come up, man. When you're starting, what is he going to do with the $5,000? This is everybody's question. Are you going to really risk it and go buy $5,000 worth of Bitcoin, cross your fingers and hope it goes up? I think that would be irresponsible. Could it work? Yes, it could. In fact, could it work big? If he'd have bought $5,000 worth of this 5 years ago, but he didn't, he would have 10 Bitcoins that today would be worth $500,000. 500 grand. But he didn't do that, and most of you can't do that. Now, could he go out and buy take $5,000 and buy a $200,000 house? He could, and now he's got to do what? He's got to go finance $195,000. He's got to take care of the house, fix the house, put a roof on the house, paint the house. And remember what he was worried about? His job. He's like, I can't lose my job. All you did right here, sir, is get another job. I would tell you what I would tell you to do is never lose your $5,000. Number 1, never lose this money. Never lose. Okay. 2, invest in something where you get cash flow. 3, wait for long-term appreciation. And And to do that, what I would tell you to do with the entire $5,000 is I'd put it in that deal that I'm doing right now at Cardone Capital. You'll get the cash flow, you'll get the appreciation, you won't lose your money, you'll get a check, you and your family, you get a check every 3 months, and you're invested with me as a partner. I'll never let you down. This deal is massive. This deal was built for you. And this is what I'm doing to help people like yourself that are in situations where you don't have time. You're a husband, a father, working. You don't have time to go out and find these deals, and then you'll never get a deal big enough. So rather than being involved in a $200,000 house that you got to fix, your first real estate investment would be a $230 million transaction, and I would be your partner. And you would immediately, and this is for everybody listening, you would immediately become an investor rather than a saver. Go ahead, I interrupted you.
No, that sounds great. I like that. I like how that sounds.
And we just, two Fridays ago, maybe 3 Fridays ago, I just made this available to people at $1,000 increments. Typically, this has been $100,000 to $250 per investor. We just made this available for investors at $1,000 increments. We had 20,000 people, ladies and gentlemen, in 3 Fridays, 2.5 weeks, register to be involved in this. 20,000. I told you my goal is 70,000. And I'm telling everybody what I'm doing. Here's my deal. Here's the funding. This is the financing. I've already bought the deal with my money. I've done everything but close this transaction. I have the debt in place, the cash done, the property's there. It already cash flows. It's 99% occupied. So I'd love to have you and your family invested with us as a partner if that works for you.
Most definitely. I would love to do that.
And then the other thing that I would tell you to do is get rid of that $5,000 so that you're not worried about it right now anymore. And you and the family live off the cash flow. Start doing that again. So you get rid of the $5,000, push it into the fund, and then what you do is you go back out and worry about one thing every day, getting more money to push in that fund. And you keep pushing that into the fund until you accumulate assets over the next 2 or 3 or 4 years.
Gotcha. That makes sense.
The website's cardonecapital.com, cardonecapital.com. And I'd love to have you invested with us. Never let you down, my friend.
All right, let's go to our next caller. Our next caller is Brett from Indiana.
Brett, how you doing, my friend?
I'm doing good.
Good. Do you have a deal or you got a question?
I have a question. I'm watching your show. I want to tell you that I'm really thankful for you taking the time out to help people like myself. I just started getting into trying to invest, and I'm out in the same boat as the previous gentleman. I've got about $7,000, and I put it all into Amazon. I've been betting a lot, gambling. I won $1,200 last night, but that's not what I want to do.
Yeah.
I want to get started with you.
Yeah. So look, man, I mean, this is the problem I had when I had $10,000, $7,000. What do I put it in? And then for whatever reason, I always picked the wrong stock at the wrong time. And good for you that you got lucky on Amazon. You picked up some money on Amazon already?
No, from gambling.
Oh, you were gambling.
I was playing last night on the football game.
Oh, okay. All right. Well, good for you, man. So that's what people do when they have cash.
With you, and I have only $10,000, but I'm really anxious. I want to get out there and hustle and run, but I don't. I invest it all, and then I have to sit and wait, and I get anxious.
Yeah.
And I would like to maybe get a furniture salesman job and learn to deal more with people, because that's my issue.
Yeah. Well, I would tell you, number one, get the $7,000 into something illiquid. Put the $7,000 in this real estate deal I'm doing right now. You'll never regret it. Okay.
Absolutely. Can you get me in touch with somebody to help me do that?
Yeah. Go to the website cardonecapital.com.
Okay.
And you literally, if you're a U.S. citizen or a U.S. person, you can invest there. We cannot take money from outside the United States unless you're a U.S. person outside the United States. And you quit gambling with your money, man. I would take the whole $7,000. People ask me every day, how much should I put in a deal? Everything you have, put it all in there. I would not sit with any money in a savings account, folks. None. I would not keep cash around. And I know people like, I get accused, people like, oh man, that's so irresponsible. I'm the most responsible person you're ever going to know around money. There's nothing irresponsible I do around money. And I would put all $7,000 in there, and then I would focus on your people skills every day, forcing you to go out into the marketplace and quit gambling on ball games on Sunday and go out and meet people, man. Because if you didn't have that dough sitting around, you wouldn't have made that bet yesterday.
No, sir.
How much you make?
About $90,000 a year, about $2,000 a week gross, and I bring home about $1,500 after child support and everything. And I want to invest it, and I don't know what to do with it all. I lose a lot.
That $1,500 a month, $1,500 a month, like I would try to invest as much of that as I could in these real estate deals, because that'll take care of your child support going forward. So everybody understands this is what I do. Okay, I'm just like you guys. Okay, I started with no money. I went out, I traded time for money. I get money, I take the money, I invest all of it. I didn't spend any money. Literally, like if you guys saw the way I lived between the age of 25 and 35, you'd be like, man, you didn't change your standard of living like one penny. No, I didn't, because I invested everything. So if I made $1,500 a week, I lived on as little of the $1,500 as possible, and I would invest, let's say $1,200 and live on $300. I put $1,200 aside. Next week I go out and get another $1,200. Next week I get another $1,200. Fourth week I get another $1,200. All I did was hustle. I got $5,000 at the end of 4 weeks hustling. I didn't spend it. I prepared to have it pushed into a real estate deal that I would forget about and just wait for it to pay me cash flow. When the property cash flowed, if it paid me $300 a year, that's how I improved my quality of living. Off the drip, not off the investment. I never touched the investment, and I only spent the passive income. That's why I live off the cash flow. I don't live off the income. I live off the cash flow that was produced because I converted the income to an investment. And what most people do is they never get to this step. Okay? They earn money. You earn money by trading time. You get money and you save it. Okay? Guess where savings always goes? It always gets lost to emergencies, problems, situations, everything. So lawsuits. Because if you got cash in a bank, they're going to sue you for it. Every day I come to work, first thing I look at is my income. First email I get every single day is how much cash I have. Why? Because I want to take the cash and I want to convert the cash to a flow, a cash flow. Go ahead, Johnny.
All right, we got our next caller. We got Eve from Portland.
And in this real estate deal, as Eve gets on the phone, this real estate deal that I'm doing, folks, there's only one of these. Johnny, if you show it to them, there's not 21 million of these. People are like, Bitcoin's got scarcity. Okay, good. Well, that property right there, there's only one of them in that location. There's only ever going to be one of them in that location. You can't go get another one of these. You can't build another one of these. They can't be permitted to build another one of these. Our cost to build that property is less today. Our cost to own is less today than it would be to build. It would take 4 years to build it if it could get approved again today. You just can't replace it, so it's very, very scarce. Let's talk to Eve.
All right, Eve's on.
Eve, how you doing?
What's up, Uncle G?
What's up, man? What's up?
First and foremost, I want to say thank you. I was on your Saturday real estate webinar. I bought your course, and thank you for the $1,000 gift in Cardone Capital.
Yeah, you got it. Did you see that all the way through?
Yes, I did.
Okay, good. Congratulations. Did you? How much money are you sitting on? How much money do you have to your name?
Well, I'm about to put another $4,000 later today into Cardone Capital.
Yeah, that's what I was going to tell you. So a bunch of you that joined me on Saturday, I did this super cool thing Saturday where anybody that bought our course for $1,040, I gave them a gift of investing in this deal with me. And I failed to tell people, you guys can all, because we had hundreds of phone calls on Saturday saying, hey, can I put more money in the deal in addition to the gift? So you can definitely do that. Okay, what's your question?
Well, I wanted to talk about crypto because I've been a crypto investor for quite some time, and I just kind of want to share maybe something that nobody knows.
Yeah, please.
But there's something called staking, which actually, when you buy a crypto, you can actually get passive income from it. It's called proof of stake. So, like for an example, if you had bought into a Luna crypto for like $500, because not a lot of people have large capital. So let's say I just put $500 in Luna. Let's say last year, March 20, it was 13 cents a coin. Today, Luna is now called Terra. It's now $41 a coin. So your
Wow.
$500 turned into 150 grand. So you got all that capital gain upside, right?
Yeah,
But
yeah.
You know, if it went down to zero, it would go down to 500, right? So you only lost 500, but you got the upside. But the part that nobody knows is if you stake your money into the network, what staking really means is you're putting your tokens into the network to secure the network for whatever it's doing, and you get this passive income that comes in. It can be annually, it can be quarterly, and essentially, I think that the yield was 10%. So if I bought $500 of Luna at 13 cents, I probably got 3,800 tokens, and for a 10% yield that I got, that's 380 tokens. So that's about $15,000 I got in passive income from the tokens, right?
So
And this
Eve,
is not considering-
so how do I get the passive income? Like, can I get the Luna and trade it for food or rent?
No.
So when you say I'm
Yeah.
getting passive income, I'm just building more Luna.
Yeah, you're building more Luna, so you get received the token in Luna, so
Right.
it's not like a dividend.
But how do I
stock
live,
where you
dude?
get
How,
to-
explain to me how I live. And I'm being very open-minded. Like, how do I live? How does the everyday person, I put $500 in it. It was 13 cents. So I'm not rich. We're not rich here. This guy's not rich because he's talking about $500, right?
Yeah.
So the guy that's only got $500, now he's got $150,000 worth of Luna, but I still got a problem with eating because my income. Yeah. So
So I think the of course you would probably have to sell the staking, like the passive income that you're receiving, the tokens, and of course I believe you're going to get hit with capital gains tax. So obviously if you compare that to real estate is going to be much better. But
Right.
I think I just wanted to share this because not a lot of people know that there is a form of
Yeah.
passive income, but it's nothing like real estate.
yeah, and that's called staking.
Yeah.
Now let me ask you this: is there a way for me to leverage? Is there a way for me to borrow against my crypto holdings?
I would say it's not a smart idea to do that at all because of just the volatility.
Yeah.
So again, nothing like real estate. I think it's better that you just put in a little money or like a small position. That way, you know what the risk that you're putting in is the only thing that goes down to zero.
Yeah.
But if you over leverage, there's a great chance that if you're leveraging from an exchange, you're going to get a margin call, and that's going to be really, really bad. I think when crypto went down in March, like everybody got hit with margin calls and lost a lot of money.
So do you want to explain to everybody what a margin call is, just so we like if you went and bought one Bitcoin right now for $58,000 and paid cash for it, you converted cash fiat to $58,000, you could actually go borrow probably $25,000 of that, maybe a little more.
About so, yeah.
So
and if the coin went down a certain percentage or a certain dollar amount, the exchange would do a margin call, which means you have to either put money in or you have to take the loss as is.
Yeah, just so everybody understands, because I have people tell me, oh man, you can borrow against your Bitcoin. Okay, but it's called a margin call, okay? And it's called a margin call for a reason. You can get half of your position in cash. That's a non-taxable event. Super cool, by the way. Super, super cool, non-taxable event. But if Bitcoin, for some reason, tomorrow morning you wake up and Elon Musk went on and said, I'm getting rid of all my Bitcoin, and the people at Foursquare said, we're taking it off our books, or another country comes up and says, we're not accepting this, and this thing drops down to 23,000 overnight. It's done it before. I think it's dropped 80%, like three or four or five different times. If it does that, you're going to get a call from Fidelity, Merrill, whoever's holding your Bitcoin saying, hey, sell the position. You have until 5 o'clock today to either cover your position or sell your position. Is that right?
Yes.
Yeah.
Yeah. And that's bad. That's why, when I invest in crypto, I only invest I'm not trying to invest like my whole house and stuff like that. You only
Yeah.
put what you're willing to lose.
Yeah.
But in real estate, like there's something I've learned. I'm 60 pages into one of your books about real estate. It's the only place where I think it's safe to leverage.
Dude, it's the best. It is the safest single asset class in the world to leverage. That's why the big institutions like it so much. And again, folks, I'm not talking about a single family home here. Okay, I'm not talking about where you live. So just because you eat dog food don't mean it's a business. You know, just because you live in a house and you love your house doesn't mean somebody else is going to love your house as much as you do. Now, when you buy a piece of real estate where people want to live and there's 99% occupancy, show them that building, Johnny. Guys, I haven't even closed on this. People know I'm buying it and went from 91 to 99% occupied. People know I'm buying it and they want to be in a building. 99% occupied, 456 units times 0.99, 451 of the units is occupied at $2,600 a month. The income on that property is going to be $1.1 million the first month I own it. It'll do $12 to $14 million in year one without me doing anything. So real estate is that asset class. It's not liquid. However, with real estate, let's say you have a $100,000 in real estate that buys $400,000 worth, $100,000 in cash. In real estate, in cash, buys $400,000. You can't do that in Bitcoin, can you? Can you borrow to leverage up your Bitcoin holdings or your crypto earnings holdings? Did we lose him, Johnny?
Oh, sorry, what was that?
Yeah. Do you know of any way that I can leverage crypto, meaning I could use 100 grand to buy a $400,000 position?
I think you just have to do it through the exchanges. But like I since I've studied crypto, I just think that's not. I think that's the riskiest thing you could do.
Yeah, it'd be crazy. It'd
It's
be
not as safe as real estate.
I don't think anybody's going to do that. By the way, any more than you're going to go to say Bank of America and say I have $100,000. Try to do this, and I want to buy $400,000 of Bank of America stock. They're not going to let you do that. But they'll lend you $400,000 on an apartment building that's got 40 units in Tulsa, Oklahoma, that's rented with 39 units where they're paying rent. Banks will give you that loan. Banks will not give you a loan to buy their own paper. So that is the value. And this gentleman's sharing with you, I think it's Eve, right? Sharing with you
Yes, sir.
that he would not do it, and he's positive on the crypto space. So there's pluses and minuses of every investment.
Absolutely.
How much money are you sitting on?
Right now on cash, $8 grand.
Yeah. Would you take the entire $8,000? Let's say you were forced, God came down and said, hey, you're going to take the entire $8,000 and you're going to invest either in real estate or you're going to buy some Bitcoin this morning, and you got to do the whole $8 grand, okay? And you don't have a choice. You have to do one or the other. And by the way, we're going to come back in 5 years, okay, and check and see which one was the best bet for you. We're going to take the cash flow and the income. Okay, if you pick the wrong one, you're going to hell. If you pick the right one, you're going to heaven. Which one would you pick?
Oh, real estate automatic.
Yeah. Just think about that,
Automatic,
folks.
sir.
Quit gambling with your money. Thank you, Eve. Thanks for calling in. Quit gambling with your money, folks. You should be able to make big bets when you make a bet. Otherwise, you're gambling. The reason people make small bets in Las Vegas is because they know there's a better chance of losing than winning. If you knew for sure you were going to win, you'd put it all in. Okay? Every Monday,
We got Marius from Detroit.
Every Monday, I take your calls about money, finance, the economy. I'm not here to be right, folks. I'm just here to open your mind, start a conversation. Mario, what's going on?
What's up, man? Uncle G, I just wanted to say thank you so much, number one, for doing this on a weekly basis. You are the realest uncle out there. That's number one. And then two is this. Man, I'm 23 years old, and I'm a network marketer, been a network marketer for about 4 years, and since I was 19, seen lots of success within it. And I am invested in So, but I love passive income, and I do other passive income endeavors, and I'm just in this limbo between real estate and crypto. Currently, I like crypto more, but I'm really open-minded on real estate. I just don't know how to do it, and yeah.
Yeah, and so this is the negatives of real estate, right? It's heavy. You got to learn something. It's not, you can't just go buy a piece like you can. I mean, even Bitcoin, the only way to learn it is to do it. You can't become a Bitcoin investor or Ethereum investor or Luna. I didn't even know about Luna. I never even heard about Luna, right? I had a guy give me 1 million pet coins. This is the new thing, Grant. It's gonna be unbelievable. Shibu's going through the roof and pet coins going to the moon. I'm like, okay. So we have a little partnership, and he's like, I just want to give you this if it turns into something. So I'm like, that's cool. The only way to become an investor, folks, is to become an investor. That's why, like, a lot of people don't have $100,000. That's why we opened up Cardone Capital to people with $1,000. $1,000 can get you a position in a $200 million piece of real estate that is already figured out by me. So I would just tell you, the gentleman on the phone, Mario, dude, the way to become an investor is to become an investor. Invest with me. And then when I start sending you checks every quarter, first of all, you're going to see the property, you're going to see the address, you're going to have to read why I made a decision to buy this property. Then you become an investor with me. You become an investor, and then you can learn. You can learn by the real practical. It's like if I teach you how to ride a bike and I never give you a bike, you're never going to learn how to ride a bike. So what we're doing at Cardone Capital is, in addition to me educating you, I give you a vehicle. How much money is he sitting on?
This guy right here, we haven't asked him.
Okay. Mario, how much money are you sitting on? 22 years old. Did we lose him?
Hey, Mario, is he still there? He's asking you a question.
How much money are you sitting on, Mario?
Grant, I said I'm 23 years old. I got about 17,000 on cash.
Okay, so look, what I would do is I don't know how much cash you need sitting around all the time. I don't ever need any personally. You guys watch me on Undercover Billionaire. I'm like, I don't need any money. I'm gonna go get money. I don't need money sitting around. I need money invested. For everybody watching, listen to me. You guys need money invested. You don't need money sitting around. Money sitting around gets destroyed. It gets lost. It gets depreciated. It gets burnt, and it gets stolen. And it gets people with the hand out. Can you give me some of that money you got? So I would take the entire $17,000. This is what it would do. $17,000 in that deal that I'm doing right now would buy him a $68,000 investment. I immediately 4x'd his money. His cash leveraged into real estate transaction buys him a $68,000 position in a $230 million project. If between now and December 10th he comes up with another $10,000, he can add the $10,000, and that will buy him $40,000 worth of real estate. Now he would be at 108. He gets all the benefits of this piece of real estate, number one of which, he doesn't lose his money because this money went into a real asset. And as long as that asset is standing there real with tenants in it, it's not made up. This is not an NFT. This is not something that sits on your phone. Now the NFT is a code, okay, supporting with limited supply, some value, some contract with another person that says it's worth X, okay? But just like this dollar, the NFT, the Bitcoin, the Luna, okay, the value is determined by the marketplace. This building's value is determined by what the tenant is willing to pay to live there. So he would now have, let's say he did $27,000 between now and the end of the year, he would have a $108,000 position in a piece of real estate that can't go away. And what would he worry about in December? Okay, I got to go hustle some more so I can buy Christmas gifts. He's going to get a check from this property every quarter. And over the next 3 years, 5 years, 7 years, as the rents go up, so does his cash flow. When the cash flow goes up, the value of the property goes up. As the property value goes up, we decide we want to refinance the property and give everybody their money back or a portion of their money back. Or we sell the property to somebody that's willing to pay more money to us, okay? That's why real estate's been such a haven for people's wealth. So many people, so many wealthy people have used real estate as a place to preserve their wealth, protect them, provide them with cash flow, and take advantage of appreciation over long periods of time.
All right, this is our last caller, Aurelio from Cali.
How you doing, my friend, in Cali, California? What's going on?
How you doing? How you doing, Mr. Cardone? I just want to say that I appreciate you, man. I'm a new person to watching your videos, and I appreciate all your information that you've been passing along.
Thank you.
I've learned a lot in the short time that I've been watching your videos, but I'll continue to watch them. So a brief little story about me is like I'm 46 years old. I got a family of 3 adult kids now. They're young adults and they're in college and whatnot, married. And I've been through the ups and downs of the real estate market with out here in California. I moved out at 21, bought a condo for $89,000. It went up 6 years later to $190,000. So I rolled that over to a bigger house, somewhere to raise my kids in a little better area. That continued to go up. This is back in the early, 2000s. So I got in the real estate market. I invested some of my money that I made on the value of the house going up. I bought 3 properties in Arizona, but I put all my eggs in one basket at that time. And I bought a house out here when they were doing those bogus loans where you don't put nothing down. You didn't put nothing down. So I I basically had a high mortgage at a fluctuating rate. That's the mistake I made. I had 3 passive income homes in Arizona, but when things went wrong with my primary house because of that loan, and my payment was so high, I couldn't afford it, and the market crashed, all the real estate crashed at the same time. I had all my eggs in one basket, and it kind of just, with my primary house, it kind of caused everything else to kind of tumble. So I had to make decisions to short sell those properties, and so I had to start over. And you talking about the crypto market, I continue to work. I always had a job. I work for U.S. Steel out here in Pittsburgh, California, in the Bay Area, and I make somewhere around $100,000 a year. Been gradually, the good thing about America is we always get a second chance.
Yeah.
My credit, rebuilt my credit, was able to get a house 6 years later after I lost everything pretty much. So I started investing in cryptocurrency, built my income back up. And like you say, I don't keep much in the bank. I invest almost all my money, but I have a majority of it into crypto. My primary residence has gone up quite a bit. I bought it for $300,000. It's now worth like $650,000 to $700,000. So I got a decent mortgage on that. But I want to get back into the real estate. So what interests me on this phone call is what you were offering, the $1,000 investment on a multi-complex like the unit that you were showing there.
Right. How much cash are you sitting on right now?
Well, in my bank, I don't have a whole lot. On cryptos, I got about $140,000.
Okay.
And it fluctuates. It could go up and it could go down, but I don't worry about that because it's new. It's infant. It's infinite stage. Infinite stage, and so I'm letting that money work for me, and it's gained quite a bit. But as far as my bank account, I only have maybe $2,000 in there. I kind of like what you say. So make your money work for you.
Yeah, this is what I would tell you to do. Okay, first of all, you took a spanking back. You took some risks that you didn't need to, that now you know. You got $2,000 sitting in a bank account. I would take and transfer the entire $2,000 into this real estate deal right now. That's what I do with my cash. I'm not telling anybody to be irresponsible. You guys got to do your own homework, seek your own advice. I'm not a financial advisor. I'm a real estate investor. And I'm just telling you guys what I do with my money. I would not have money sitting around in a bank account, okay? You can always, if there was an emergency, you could always tap some of your Bitcoin, or you could always tap into an equity line for your house. I would take the $2,000, I would invest in that project. It's going to give you $8,000. You're going to get a quarterly dividend, and you're going to be invested in one of the best pieces of real estate in the state of Florida, maybe the United States of America, and definitely the city of Fort Lauderdale, which Fort Lauderdale, Miami, South Florida is on fire, okay? If this was in Los Angeles, California, this building would be at least double, maybe triple the price it is today. When we get the kind of influx of people we have from New York, New Jersey, Illinois, and including Los Angeles, California, San Francisco, they're coming to Florida, folks. When they come in here and they bring jobs here, tech, banking's coming, everything's coming here, okay? What happens is people rent where they live. We're surrounded by $4 and $5 million houses in this on this property. The location's sick. The amenities are great. It's 99% occupied. For those of you out there like, oh man, I can't get rid of all my cash. Folks, you got cash sitting around dying. It is dying. His money right now earns at the bank times 0.0018. He's going to earn $3.60 at the bank this year, and the bank's going to charge him probably $36 to keep the money there. So he's going to lose $33 banking. So this is what I do. I'm not giving you guys financial advice. I'm telling you what I do. I get cash, put it in the bank, I take it, and I convert it to real estate, because he immediately gets a 4X. He immediately grows his money. He just needs to wait now. He needs to wait for the distributions and the value to take care of the debt. Okay? I know it's a little complicated, because real estate, but crypto, you're not going to go use debt to buy crypto. He's got $140,000 worth of crypto. If he needed $4,000 tomorrow, he can go sell $4,000 worth of his crypto. Boom, he's got his cash. That's what I would do. And we just recently opened Cardone Capital up to $1,000 investments. You can do $2,000, $4,000, $6,000, $8,000. We have people using their IRAs and their 401ks, self-directed money. We got people putting in 25 grand, 100 grand, 250 grand. Here, I'll just show you. Let me see if I can get in here. And Johnny, you can show this. Let me just get logged in first, Johnny. Cardone, let me see, ready to invest. No, I want to log in. Yes. And I think this is going to let me in. Don't show them yet, Johnny.
All right.
Let me see. But you guys got to get real estate on your net worth statement. You know, like you want it on there. You don't want to show up with the bank. Okay, you can show them this, Johnny. These are people that are investing with me right now. Okay, 18,000 registered accredited. Where's my non-accredited? This is in the non-accredited fund. $644 million invested in this fund. In all our funds, okay? We've opened this up to like $26 million has been divested. This is just our accredited list. So I'm just showing you in real time. This is our accredited offerings. Let me show you the offerings available right now. And without showing any names here, Johnny, I don't want to show any names of people. Not this one. Let me see here. Yeah, there you go, Johnny. Let me see. Yeah, watch this. So there's $12 million right there been invested. Let's see if this shows it. So you see these people right here? Go ahead, Johnny, show this now. $250,000 came in, $250,000, $209,000, $75,000, $50,000. People are putting a lot more than $1,000 in. So I don't know if you can see all this, but 100, 250, 200, 130, 500, 100, 192. On our non-accredited, it's $1,000, $1,000, $5,000, $25,000, $26,000. We've raised almost $700 million from investors. I'm going to raise $7 billion before it's over with. I'm going to build the biggest real estate portfolio that's crowdfunded by the everyday person that's ever been done in America. And rather than going to the banks and the big wealthy institutions to get money, I'm going to go to my friends and followers, the people that call in our show on Mondays and say, hey, you want to do $1,000? You want to do 10 grand? You want to do 7 grand? You want to do 17? Take as much of it as you want. I got $4 billion worth of real estate today. I want to help other people get their start in real estate. So today's show was about crypto versus real estate, benefits to both of them. One's liquid, one's not. But remember what I said about the liquidity. You guys, you hodlers, y'all ain't selling your damn crypto anyway. So quit saying it's liquid when you know you ain't selling it, but you could if you had to. Well, guess what? I could go borrow money against my real estate if I had to. My name's Grant Cardone. Appreciate you watching today. Please comment. If you hadn't subscribed, do that. Also, if you want to see our archive shows, you want to go back and see all the shows we've done and the transcripts, they're at grantcardonetv.com, where this year, this year, we're going to be dropping some whack shows, okay? We're going to be producing some shows like Little Kid Entrepreneurs. Oh yeah, that's going to be good. We're going to be doing Undercover Entrepreneur, go around the world, find other players, millionaires, billionaires, zillionaires, and putting you through the Undercover Billionaire test.
Put your money where your mouth is.
Put your money where your face is. How much you got? We're going to be doing a show called Whatever It Takes. We're going to bring Whatever It Takes back. We're looking for entrepreneurs that want to come out and do whatever it takes. If you got a great idea for a business, we're going to take 12 to 16 super startup entrepreneurs, and we're going to find out if you got whatever it takes for me to invest in a deal with you. Somebody going to win $1 million. I'm going to pick you up on my plane. We're going to fly you to a destination, and you're going to pitch us for a week on your deal. We're going to grind you out for 1 week, find out if you got whatever it takes. We're going to bring that show back. This is going to be at grantcardonetv.com. We're going to produce this professionally. We're starting a company called 10X Media Productions. You're going to see all this roll out next year. What else am I doing, Johnny?
We got the growth conference coming up. We got the real estate summit coming up.
We got a real estate summit in 2 weeks, December 12th, 13th, and 14th. It's almost sold out. GrantCardone.com/summit. I think the tickets are $1,000 and $5,000.
Link will be in the description.
Okay, man, come to that. If you guys are serious about real estate investing, come to that. It's 3 days with me. I think the tickets are on sale for $1,000, $5,000, and maybe $20,000. 3 days, super, probably the best qualified event. Well, be about 2,000 real estate investors there. If you're serious about the real estate game, there'll be lenders there. There'll be equity in the room. There'll be money. There'll be professional real estate people. There'll be people starting up. But it is the place to be. I do 2 of these a year, and the last one this year is, yeah, those tickets are what? What's the third level? VIP is $25,000. So $997, I think we got some of those left. $24.97 and $24,997. 3 days, executive VIP or ultimate VIP. And what else, Johnny? What else we got? Man, I just appreciate you guys following me. You know, appreciate you guys watching. Whether you're a security guard for a famous person, or a banker, or a rich person, or whether you're you're cleaning somebody's toilets today. I haven't done either one of these jobs. I've cleaned my own toilets and been my own security. But if you're a salesperson, if you're in network marketing, ladies and gentlemen, you need to get your cash. I don't care what you do with your cash. Except don't lose it. Number one, don't lose it. Okay, rule number one, don't lose it. Rule number 2, don't save it. Do not save it. Because you can't save it. It's going down. People are like, I'm saving my money. You cannot save money. It's garbage. Okay? 3, you got to invest your money. You must invest. You must invest. Invest more in your future. Invest more money in real estate than you do boobies and butts, and lips, and makeup, and cars, and belts, and bags, man. If you're going to go about and buy a Louis Vuitton bag, That's $18,000. Man, before you do that, once you go invest $18,000 in my real estate deal and wait for the passive income, the cash flow that comes to pay for your damn Louis Vuitton. That's the proper order. Don't buy the bag. And by the way, don't buy the damn stock. You guys are like, I'm gonna buy Gucci stock, man. You ain't buying Gucci stock. You're paying Blackstone to invest in Louis Vuitton. That's who owns that. Don't kid yourself. So you're trading paper for more paper. What I want you to do is I want you to convert paper to something real that pays you, okay? So you protect your $18,000. You get the lift of inflation and appreciation, long-term appreciation, and you get the tax write-offs. There's no tax write-off with a Louis Vuitton bag. And there's no tax write-off buying Ethereum, Bitcoin, or Dogecoin. You know that. But there is big tax benefits to buying real estate, to investing in real estate. You get the cash flow, you get the leverage, you get the appreciation, you get the depreciation, and you get the tax write-offs, okay? Grant Cardone, Cardone Capital is a place to be. So they packed up their money and they moved it over to me and let me take care of it, okay? See you guys 12th, 13th, and 14th of the summit. I think we got 100 seats left, 110 seats left. It's almost sold out, so make sure you grab that. We sold 700 seats Saturday. GrantCardone.com/summit is where you buy your seat. If you're serious about real estate in 2022, come hang out with me for 3 days. I teach the entire course. I'm going to have some superstar speakers there to talk to you about debt, to simplify debt, show you where to get equity. Also people to show you how to raise money. People like me that have done it themselves, that came up from nothing. I'll see you guys in December, or I'll see you next Monday.